Thanks, Fred. No pressure, right? After being called smart. Good afternoon, or is it evening, ladies and gentlemen, and thank you for coming to listen to us tonight. Hopefully we can impart some lessons from the journeys that we have walked. So tonight I'm speaking wearing 3, if not more hats. I'm speaking as an entrepreneur, first and foremost, so I'm very excited to be amongst entrepreneurs. So I've walked the journey of fundraising and having to figure out, what makes a fundable business or investable business. I'm also speaking as somebody who actually invests in businesses of funds and invests in very early stage and startup businesses, having funded and invested in almost 200 early stage businesses since our inception just over 12 years ago. And especially in the tech space over the past 5 years. I've seen some of the portfolio companies are here today. So hopefully you guys will understand why we gave you a hard time when you were applying for funding from us. And thirdly, as somebody who spends a lot of time actually raising funding, so just like most entrepreneurs, guess what? We also have to go to bigger institutions and beg for money so that we have enough money in our coffers to come and invest in your businesses. So we walk the same journey as yourselves. So I do sympathize with your journey, although a lot of the time I'm sitting on the other side of the table. So I thought today I'm really just going to focus on what we've observed over the years that we have been investing in women-owned businesses, in tech startups, and generally in SMEs and very early stage businesses, and what we have come to appreciate as the things that really, put an investor across the line on your side, and they start getting excited about your story, and they are therefore willing to invest in your story. So, one of the reasons why investors spend so much time really, doing their due diligence, screening, whatever, assessing whether this is something worth investing or not. It's because we appreciate that actually not everybody is an entrepreneur. I know that in South Africa, with the advent of, promoting entrepreneurship, which is definitely something that I'm fully in support of and we should encourage more of, we've invariably also created a whole host of people who think, oh, I too am an entrepreneur. And the reality is that not everybody is an entrepreneur. There are certain attributes that real entrepreneurs have. There's a statistic I saw a few years ago, I don't know whether it's still relevant today, that says about only 4% of the world population are entrepreneurs, meaning that there's probably a screw loose somewhere, that not your ordinary members of society. And investors appreciate and understand that. So we are constantly looking for that 4%. So it means sometimes you have to go through the 96 in order for you to get to the 94. And to get to the 4. So, what makes an investor interested in even having a conversation with you? I mean, a lot of the time, especially guys who would have pitched to your venture capital / private equity kind guys, will have noticed that if your story is not very exciting, within the first 10 to 15 minutes, they start being fidgety and start wanting to do other things. So having a very clear vision that you can sell, because it's about selling, to the person who's sitting across the table, as soon as possible, is very, very important. And when I say sell, it's not for the sake of selling, but it has to be really compelling and very, convincing that what you are onto is a great opportunity. We test for things like your ability to adapt, your ability to identify new opportunities. A lot of the guys, especially in our tech accelerator, will know that when we've tested your business idea or your technology, and we identify that perhaps once we've started doing market testing, there isn't the kind of uptake that we are looking for. We definitely want somebody who's going to say, well, it didn't quite work for this market or it didn't quite work for this solution, but I think if I tweak it here and there, actually it can work. So pivoting your business is actually not a bad idea. And in the conversation that you have with investors, it has to be clear that you're open-minded enough and you're not going to, stubbornly stick to an idea that seemed great at the time that you started. Some of the attributes that we have found over the years of successful entrepreneurs, and we do test for this as well, by the way, is your willingness to be taught, your willingness to listen, your willingness to hear new ideas, what we call a teachable spirit. You will not believe how many people are, I don't want to use the term arrogant, but I can't think of a better term. And it comes across a lot in the conversations that we have with entrepreneurs. And we find that entrepreneurs that are not willing to, take advice, and we're not saying we know everything, by the way, as investors, but I think entrepreneurs that are willing to take advice from experts, because the way that we work, which I did not explain, is that it's not just us as the transactors who actually look at transactions that we end up investing in. We also work in very many instances with subject matter experts. In particular, in the tech space, we work with technology experts because we are not, software engineers or anything like that. So we bring those expertise into the room, and we do test whether entrepreneurs are willing to listen, to take on board whatever it is that, the feedback is, and are willing to then make the necessary changes, or at least have the engagement, because it doesn't necessarily mean that all advice is good advice. So it's not just about the idea, right? So now that you've come up with the idea, great idea, you've come and spoken to, a VC player or a private equity player, great story, believe in the vision, they want to back you, they're all revved up. We then take it to the next step to say, so let's engage a little bit more. Can you clearly define this problem that you're trying to solve? What is the problem that you're trying to solve? Because in a problem lies a business opportunity, I'm sure we all know. Now, how do you articulate this problem and how you're going to solve it, including, everything that is going to take for you to solve? It is in, putting it on a piece of paper called a business plan. Some people call it a business think, whatever you want to call it. The point is it has to be able to be utilized by both yourself. In fact, a business plan, for me, serves a more important role in helping guide you as the entrepreneur towards your path, to success. So what is this problem that I'm trying to solve? How big is the problem? Are people really willing to pay for this solution? Is this the best solution? Who else is trying to solve this problem? Again, we see this in the tech space. A lot of tech startups are solving the same problem. It's amazing. I mean, we've just done a call for our latest cohort of startups. I don't want to tell you how many, but out of the 224 we have seen, I would say probably about 20% or so are trying to solve the problem of matching of SMEs to business opportunities. And it's amazing that everybody's thinking about the same problem. So guess what? Our problems are not really unique. If you've thought about it, or rather, our solutions are not really unique. Maybe the solution is unique in the how you want to solve the problem, but the identification of the problem oftentimes is not unique. And I think it's important to understand this. And therefore, to spend your time thinking about what is it that is going to be unique, that is going to be disruptive, that is going to be revolutionary, that is going to be innovative in how I'm going to find a solution to the problem. And be able to find a way of articulating it for yourself and for the team that you're going to be working with, of course, and of course the investor that you're trying to get, whose money you're trying to get into your business in this business plan. And this is, for me, an area that you have to spend time on. It doesn't have to be perfect. I'm also a very big believer, being an entrepreneur, I'm a big believer in doing. So put something on paper, it doesn't have to be perfect, and go out there, start, test it. The market will give you feedback. Go back, refine it, rethink it, pivot if you must, and revise your plan. Very, very important. Investors are also interested in, so what is the infrastructure? So great idea, I believe in the vision, I believe in the entrepreneur. I've read the business plan, looks great, the numbers are convincing, the story is convincing. Who's going to execute? Because as an entrepreneur, you are typically the vision holder. You're not necessarily always the person who's got the technical capability. So the importance of having the humility to acknowledge that just because you came up with an idea does not necessarily translate in you being the best person to execute is very, very important. So investors do spend a lot of time saying, so who's your team? What skills do they have? What have they achieved? What is their track record? It's not always necessary for you to have the academic background, but experience actually goes a very, very long way, by the way. So for young entrepreneurs, I would encourage that to the extent that, because the young ones are supposed to be the ones who come up with new, exciting, and innovative and disruptive ideas, right? But the guys who typically have the technical capability are the guys who've spent a bit of time in the workplace solving a few problems. So, be open-minded about bringing people into your team that actually have done something, have achieved something, so that you also minimize the chances of you making too many mistakes, because mistakes will be made. So the idea is to try and minimize them. And also just having systems in place to make sure that your business can run whether you are there or not, and systems, of course, are always relative. So I'm not saying you should go and get a big SAP ERP system to run your business, but understand what the systems and tools are that are necessary to run your business efficiently. And those are the things that I think investors are also interested in, to see whether you've really thought through these things, because having the right tools actually can bring efficiencies into your system. And of course, people are exceptionally important, not just from their capability, technical capability perspective, but I think also from a culture perspective, and I'll talk about culture in a bit, in a few minutes. I hope I'm not too much into my time. So one of the things that we definitely look for right at the beginning of the conversation, and people think that this is a very odd place to start, especially with equity investors, but equity investors actually do want to see what the end looks like. It's one of the questions that we want to know. So how much money am I going to make out of this? What kind of IRR am I going to make out of this? What kind of return am I going to make out of this? So your exit strategy has to be aligned with that of the investor. And when I say exit, it doesn't necessarily mean you have to sell your business. It could be that you decide that you want to buy back shares from the investor if you want to stay in it for a long time. Or you could plan for the, eventuality of, if I die, what should my business look like? So we want to have those conversations. And I think investors get very nervous when entrepreneurs are not willing to have the conversation around exit, because it aligns, our interests, but it also focuses the mind, because it informs what you're going to do. The day that the first rand hits your bank account from me as an investor, I need to know what you're going to be doing. And this exit discussion actually informs what it is that you're going to be doing as an entrepreneur. I spoke about people, the importance of people and culture. I have learned as an entrepreneur, I've been around now for just over 12 years. I can tell you this is probably one of the most, if not the most important aspect of a successful business. It doesn't matter how great your vision is. It doesn't matter how great your business plan is. It doesn't matter how state-of-the-art your systems and processes are. If you do not have the right culture, you might as well close the door today. That's how serious culture is. If you do not have the right culture, and I'm sure the Discovery guys will attest to this, culture is everything. They say culture eats strategy for breakfast. It is true. So this cannot be overemphasized. So as entrepreneurs, it is very, very important to be very deliberate about inculcating a particular culture if you want to achieve certain outcomes. If you do not have a culture, you cannot drive the outcomes that you want to have. And a lot of the time when we go and kick the tires, when we go and meet entrepreneurs, we actually spend time talking to the employees to say, how's it going? You want to understand, what's the work environment like? What's your experience like? What do you like about this place? Those questions that look very innocent actually are a very significant factor in entrepreneurs determining whether they're going to invest in your business or not. So please do not underplay or underestimate the importance of this. Now, the accountant in me, of course, always has to talk about numbers. When you are absent in the room, and your English is not so great, so your business plan has not done a great job of selling you. At the very least, the numbers that you sell should, that you show should sell your story. It is very, very true. Your numbers tell the story. It doesn't matter how good your business plan is. If your numbers don't support it, again, investors are not likely to want to invest in your business. So spend the time, become very intimate with your numbers, even if you are not accountants. Become very intimate with your numbers. Understand what they are telling you, because your numbers actually tell you the health of your business. They can tell you whether you're going to still be around for the next year or not. They can tell you whether you're making a profit or not. And numbers are not just about, I got, this contract and, I logged it as income in my income statement, yay. No, it's about then what did you spend to do it, and then what is the bottom line. But importantly, is what is in your bank account. A lot of entrepreneurs, their income statements look amazing, right? But then they close doors the following month, and you're like, but it doesn't make sense. If you don't have money in the bank, you don't have a business you don't have the fuel that you need to run your business. So understanding the importance of, yes, the money is in the bank and I can pay salaries, I can pay suppliers and things like that. All of these areas, by the way, I can talk to for a whole hour each, so I'm trying to move very quickly. So this is my second last slide. This is something that I think a lot of entrepreneurs, when they're looking for funding, so now going into a funding conversation and deciding where am I going to raise my capital from. It is very, very important, in my view, for entrepreneurs. I always say you should do your due diligence on the investors or the funders that you want to approach. Not every investor is for every entrepreneur, right? So understand where your business is. Are you still at startup? Are you rapidly growing? Are you a mature business? Are you in decline? Or are you rebirthing, meaning you're almost at a startup stage again, right? So you've reinvented yourself, which is something that I do quite a lot of. I think I'm in my third iteration now. And it's always very interesting. You always so the type of funding that you needs to be responsive to the stage of business you are at. And it's very important for entrepreneurs to understand and invest time understanding what that means, because that will then also inform the type of funding that you're going to look for. If, for instance, you are looking for long-term funding, if you are looking for patient funding because of the type of your business, your cash flow profile and things like that, you are probably going to want to go to equity investors. And even there, you need to understand which equity investors. Within the equity space, there are guys who do seed funding, angel funding, early stage VC, late stage VC, private equity. So you need to understand that and understand who is more appropriate for you. But also actually understanding the investors' understanding of the space that you operate in. If you're a tech business, you are probably best advised to talk to a Clive, for instance, right? Because that's what he specializes in. Or you come and talk to us for our tech accelerator. So, and then, of course, if you're just looking for short-term funding, you've got a bit of a cash crunch, understanding the type of funding that is relevant for your business, because these are the types of things that funders and investors look for. I pray I was within my 20 minutes. Thank you for listening to me.